The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 12th day of January. My pleasure to be here Monday through Friday. Of course, Monday will be off. Hey, couple of things going on. Let me just get this out the way. In Boston, in the Boston area, downtown Boston, at the auto show, it's called the New England. Is it called the New England Auto Show? I go every year, and it's just fascinating to see the overall improvement in cars. When I left, I suddenly realized that it opened yesterday. It's very interesting. Last year, just purely by chance, I was ticket number one, first person to get in there. This year got there a little later, but it was still very exciting to be there because the overall standard is the highest I can ever recall in any auto show ever since I've been going, and that's just a long, long time. That's number one. Number two is, as I was leaving, I said to myself, wait a minute, I don't think I saw many vehicles at all that were under 22,000. And that's, of course, just the price that you see is not the price that you're going to pay. They put the most basic price for every single vehicle. And after that, they just add whatever it is. Some things were very impressive. The Hyundai, once again, quality has been improving. It is really a very superior product. Came from nothing. I remember 5 years ago talking about saying, what an improvement. And then 3 years ago, I said, this is remarkable. And it's just, it really is quite impressive. So that's the Hyundai. The other is that the Lincoln is very impressive for an American company to be challenging the likes of a Genesis. That's the Nissan. That's their spin-off. Remember, the Lexus comes from Toyota, and Infiniti comes from the Honda company. What we're looking at is something that's very, very important. I think there's been a lot of work done in safety. Well, of course, safety is very important. There's been a lot of work done on improving, for most of the manufacturers, for improving the quality of the drivability. Let's call it just the general day-to-day drivability. But at the same time, fuel efficiency has improved in most of the products. Some of them are quite fantastic, and certainly the hybrids are quite incredible. Once again, I was impressed with the improvement in products like the Subaru, which here in the Northeast, very popular car. Their product lineup. I'm very disappointed in something like the Crosstrek, which is really a lovely vehicle, which I have actually driven, but it feels a little underpowered. I don't know why they have an underpowered vehicle. The other thing is, I understand what the thinking has been for years why Honda and Toyota don't, in fact, have all-wheel drive cars for the Northeast. And there's a lot of people up here, and I think a lot of people would be buying them. And most of the time, they're talking about they don't want to bastardize, or whatever the expression is these days. There are other products. So they have the SUVs, which are all-wheel drive. But if you want something round about the size of, say, Toyota RAV4 in an all-wheel drive, there's not that much choice. In fact, I think Subaru Legacy is probably the only one, and it's about 7 or 8 inches longer. So this is a very interesting thing. Mercedes didn't show up. I didn't even realize until the very end. I said to my friend, I said, hey, wait, where's our Mercedes? We usually go and have a look, and we marvel at the fact that the seats used to be a plank, a hardwood plank. And over the years, those seats have become softer and softer. And then the American cars, which used to be softy, have become much more stabilized. Volvo still has some of the best, not their top of the line, but their like the Crosstrek, whatever they call it, what do they call it? Cross country, I think. Those seats are still some of the best in the show. Buick was very impressive. So I just wanted to say that I was expecting this year to see three things. One is that speed is starting to be emphasized a lot more, and it hadn't been for a few years. The other is that because you start to run out of colors that I had mentioned last year, I was expecting to see two-tone, like back in the 1950s, those two-tone cars. And I think I saw a few, just the hint. So I think two-tone will be coming back because after a while you run out of ideas. Two-tone is a nice, easy thing to do, and it actually looks kind of cool. And the third thing was that the accoutrements within the car, from the most basic car, are absolutely terrific. You know, you don't rust out anymore like you used to. Just a whole bunch of standard things that are very, very good. However, the amount of money being spent on the electrical part of it, that is the computerized aspect, that's where the profits are coming in. And Chevy, as their cars, in fact, feel a little bit old-fashioned in a certain way, but their product lineup is very broad and very good. I was actually impressed with most of what I saw. Mini Cooper is always a great little car, but you know, riding a little thing like that around here, not sure such a great thing, hazardous to your health. But it was great. And I'll talk a little bit more as we go on because I want to get straight to the market. So here we go. The Dow's up 196 at an all-time high. It broke above the up channel resistance. The MACD is strong. Stochastic is flattening out at 94%. On-balance volume is becoming a little overbought. And it's that overbought condition that I'm watching really closely for subscribers. And that says maybe next week we start a consolidation. Maybe it's just sideways. Maybe just kind of limited upside, a little bit of upside, but not quite as much. This is a spectacular week. Look at this. Look at these 2 weekly candles from last week to this week, 2 shortened weeks. That is, you know, some of the biggest moves we've ever seen. The weekly charts. And the monthly chart is still very strong. The S&P, so the Dow is up at 25,772, up 197. Very strong. Key support now going into next week will be where we were just 2 days ago, back at the 25,500 to 25,400 area. S&P, SPX, X, and this is going to be an important day because dollar's breaking down, gold's breaking out, and we've got the S&P has just gone to a leg D in the daily chart, extended leg D in the weekly chart, and leg D. So 3 Ds coming up for the S&P, daily, weekly, monthly. And we want to look at the QQQ, which were lagging because of Facebook. Now they've come back. They're up 88 cents at 164.17. New G/C. We'll go through these when we get back. And most importantly, I just wanted to mention as we're going into the break that gold, no, I don't want to rush this. Gold is up 9. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. resistance. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's just go back. We'll go back a little bit. The QQQ is in leg G/C with the MACD still expanding and the stochastic very strong in 94. That's to suggest that even if there's a choppy sideways motion, the 162.50 to 161.75 level, 161.75 is the 9-period moving average in the data. You can see here the weekly chart has just broken out from that very long-term trend line resistance, and that is really very important because what it says is if it closes above that today, which it should, but if it does close above that line, and right now that line would be 162.93, so it would be another 50 cents down, back down if it pulls back later in the day. That's going to be something to watch because it's almost I'll talk about something in a moment. NBR is what I was asked about in the den. I'll talk about that in terms of the magnet line. Just on a very short-term basis, this magnet line gone above it, it should still remain the magnet line as the price hovers above and below until it significantly pulls away and goes to the 160 level, and then 157.73 is the 9-period exponential moving average. Longer term, that's what you would be looking for, but it's still only a leg C in the monthly chart. So that's that. Now I'm going to go to just IWM, which was weak, then it became very strong, then it became a leader, and today it's still a leader. It's up 0.62%. It's very nice. And leg E, a little bit overbought in the on-balance volume, but the stochastic is good, and the MACD is good. The weekly chart is in leg E, and this leg E has good technicals with it. So here are the parameters that I'd be looking for next week. If there is some kind of a consolidation, it's really the middle of yesterday's candle, the 156 area. That's going to be key. A break under that says 155.66 is the 9-period moving average support. But the further away you go from the 9-period moving average in this very short term, the greater you're raising the base on the short term. So that's the way I want to look at it right now. Now we can go back to gold. Gold up, what was it, 9? Yep, 9.3 at 1331. Yesterday I was talking about this pattern. I said, the pattern's good, it's holding the 9-period moving average. My thinking was that platinum really led the way in the terms of the chart pattern because it had just a 3-day consolidation, and then the third day it actually broke above the left side high and continued, and today's even higher. Platinum's at 1,002, up 11.60, and that's the pattern I said was way more positive. You can see it is way more positive than the MACD and stochastic. However, the fact that gold did not pull back under the night, close under the 9-period moving at any point since its breakout above on the 18th of December, above the 1260-ish level, 1267 was the high of the day. That breakout was very important because it held that high above the 9-period moving average. It's only tested the 9 EMA, and that's going to be very important. The 9 EMA support now is at 1317, and it's already in leg C. This has now it has one of the reasons why for subscribers we were trying to get along a gold stock yesterday, managed to get it at a pretty decent price today, is that there was just a potential that this became a Chapman wave squash pattern in the between the MACD and the stochastic, and that allows a very quick move up to leg C. Then it takes a little bit longer as the stochastic pulls back and the fast moving average, I call that the torque. And then the momentum is the turbo, or the momentum is kept up by the green line, the fast moving average, and the 0% line being positive as the price moves up. And then the MACD has to continue the move up to a D or an E because the stochastic basically done its job just for now. And that's exactly what we've got. So this is a very nice, good breakout. It isn't an oval pattern. This is not, kind of does look a little bit like it, but it's more a circle. And this has the potential for the one-to-one to the upside. I don't want to even go there right now. I need to see another 2 bars before I can talk about that. But if it is, it would be very exciting because you'd be going from the 1240 level to the top and right there, that peak B before the breakout, and that would be 1328. So you've got, wow, that's a lot. It's 100 points. Let's call it 90 points, and then you go from the low, and that would be the low right there on the 9th of 1309, and you'd go up. So that would be an extraordinary move because it would take you above the left side highs. I'm only saying that that's one of the patterns that I would be looking at, but I need a little more time to see how the pullback occurs because so far this is very early in this particular pattern stage. However, look at the monthly. Finally, the monthly, it wasn't doing that, but it's done it very quickly. It was hugging the 9-period moving average. Now it's rocketed away. There's a good chance that if gold can trade on a weekly basis, get to the 1344, 1347 level, close it decently up in the above 1340 next week, then there's a good chance you're going to go to a leg D in the monthly chart, which would be above, wow, 1367, let's call it. Well, that would be very good. Support right now is very strong at 1310 to 1303. All right, let's go to silver just to complete the package. Silver is up, but not as much. And you remember that's what I was talking about yesterday. And I have to tell you that because the dollar's broken down so badly, we'll look at that in a moment, I'm a little surprised that gold isn't up $19 or $22. So that's the reason why I didn't want to get aggressively long, but we are long. We've got such a nice portfolio now with so many different sectors that are working beautifully. I just wanted it as part of a sector, and we have a little bit of insurance, and I think that seems appropriate right at this particular moment. I wanted to go to the dollar. The dollar, US dollar, plummeted. It hasn't broken the 91.01 low of the 8th of September, but it's pretty close, 91.28. Remember I said this is not a good pattern being under the 9-period moving average so frequently on a weekly basis, as well as the fact that there's a huge arch formation. So we took a whopping 1 penny profit in our long position, even though it did very well in the beginning, and we're out. But I'm looking at it and I'm saying, the day's not done with the dollar. There's a lot of support coming up, but mostly it's at the 200-period moving average of the monthly chart at 89.66. So let me just show you something very interesting. You've got your cup inverted. So this is an arch, right? Then you've got your handle inverted. In this case, there's a little arch. So this is like a cup and handle, one of my least favorite patterns, because by the time you recognize, not that it doesn't work, it's just that by the time you recognize it, a lot of the work's been done. So there's a trend line right now that says going below 91.01 takes you to not much lower, but it takes you to this level right here. And next week, 891, whoa, that's very interesting. How can that be? It's got to be lower, surely. I must make that correct. I'm correcting it. 90, so that'll be next week. 90.92. So it's just a tad lower. If the dollar holds there, we'll see, because the euro has this exact opposite pattern. Look, the euro-dollar currency pair broke to a new recovery high. Well, it was a peak G. You can't go to an H. There is no H. Either you have to accept that was the Chapman wave instant restart and it's the G/C, because it didn't break down below the starting point. So it's still kind of current, even though it's used up time. And this is really right now a D/B. And if it closes above, in the euro, above the high of the week of the 8th of September of 1209.21, that is positive, but it needs to close decisively high. It really needs to get to 1.22, 1.225, I'd say. And then you can say, that's definitely a breakout. That's a brand new B. Dollar's going much lower. Euro's going much higher. It's testing the 200-period exponential moving average in the monthly chart right now. We'll talk about the yen when we get back. Basil Chapman, Tiger Technicians Hour. Dow's up 194. S&P's up 14. A little divergence there. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back, and we're going to go straight to Philadelphia. We got John in Philly. John, how are you?
Basil, good day to you. Thanks for taking the call, sir.
My pleasure. So
Basil, I wanted to throw in a quick question. Since you're describing to your audience the euro chart,
yes,
the euro versus the dollar, and my very specific question is this. I'm looking at, on Tiger TV, your euro monthly charts. Notice that you're in leg B up in the Chapman wave count, and
correct,
you're sitting on the cusp of moving over that 200-month EMA.
That's the
So
orange line that people can see.
My very
Yes.
specific question is, in your experience looking at these charts, especially the currencies over these many years and decades now, Basil, how significant is a move over this 200-month EMA should it occur?
Okay, that's a really good question. So above here, you can see there was a pattern that I drawn in, maybe a year and a half, maybe 2 years ago. I think it's more than 2 years, where I said that there's a pattern in the Chapman wave methodology called the lowercase h. Sometimes the lowercase h can have a secondary arch, come back, break just a tad underneath the original low. And if there is a coincidence with a buy signal from shorter term, in this case weekly and dailies, and the MACD and the stochastic start to move higher, there's a chance that you could go to the very next peak on the left side. And in this particular case, there would have been the peak right there in November of 2016 at 1.129 after going all the way down to the 1.033 level in January of 2017. And my theory in this particular pattern is if it takes that out and closes above it, then you look to the next left side and you keep going to each previous peak. But the pattern itself says, if you take into consideration that there's a much larger H pattern and that the price has gone below the left side low, closed above it, and the technicals are strong, you could start a brand new buy mode. And the moment the price, whatever it is you're looking at, breaks and closes above the most important arch, in this case, it's the arch of the August of 2015, the high that was made at a peak B minus because it failed, but is at 1.121. We did that. And then all of a sudden, what you're looking at is you've broken out and the previous left side highs become support. We've seen that. And the 9-period moving average became support. So that's in order for me to talk about the positive side, I need to just explain the patterns. And the pattern says that as long as the MACD in the monthly chart is strong and the stochastic is holding nicely above 80%, and it keeps holding the 9-period moving average, the only barriers you have on the upside, because there was such a big decline, I call it the Grand Canyon cliffs, that just come straight down, you have to look at either gaps or a particular moving average of importance. In my case, the gap that I'm looking at here is the gap. It just happens to be a monthly gap. That's purely coincidental that you go from 1 month to the beginning, the first trading day of the next month, and you gap down. It's just a visual identification, but it's also almost an accident in many ways. But it isn't, for me, it's important because it's the low of 1.25, the candle of December of 2014, and the gap down opening January, which is at 1.206. So what's very interesting is this is the area that the market's been, the euro has been struggling at. So I look to the next icon, and now it becomes the 200-period moving average. So in essence, what we're looking at is if in January the euro closes, and this is probably the candle that is the most important because we've got speed on the side of the trend, and that's really important in any trend. The quicker you make the highs or the quicker you make the lows, the greater the chance of perpetuating that particular trend. So here we are. You've gone above the high that was made in, was that September? Yep, September 1.209. The month is still just halfway through, nicely above at 1.213. The 200-period moving average is 1.2169. So if in January there is a close anywhere, I want to give a little bit of room, in the 1.222 area, that's going to suggest very strongly you've raised the base of support, number one. Number two is that this candle, the very next candle, is going to become your target candle on the upside. That's the candle of December of 2012, 1.256 high, 1.209 low. And that becomes your next target. So those are the levels to watch. Absolutely imperative that throughout the next 4 to 6 weeks, 1.173, the 9-period moving average, is not pierced on a closing basis. It can be hit, and then you've got to bounce back up. But that would be key to me. A close under that 9-period moving average says, wait a minute, now you're going to use up time, maybe not too much more price, but you're going to use up time to consolidate. So I hope that that gives some clarification, at least what I'm looking at, John.
Yes, no, I appreciate that very much. That's very helpful. I'll be watching those parameters with you, see if this breakout on the monthly chart is for real.
Right. Now, the monthly chart is always dependent on the shorter term. So the cup formation we're looking at now, there's a pattern in the Chapman wave methodology, a double top. I call it the drop bucket, where the left side high has certain technicals that are very strong, like the MACD stochastic, the RSI. But when it comes back and retests, it's doing it. Many people like to look at volume. On the left, they'd say, oh, huge volume, but now it's testing with much lighter volume. In this case, for me, it is the technicals have not really confirmed, but the MACD has just crossed positive. So in a sense, that's really what I'm watching. So it makes the next, I would say, I'd give it time because it's weeks, but I'd much rather say a close in the 1.222 area on any day over the next, going into Wednesday or Thursday of next week would be really positive. If it starts to fail, you've got to be watching that 1.1927 area. This is the weekly chart. And the daily chart has a spike up today. I'm not sure if that's an F or a brand new leg A. I'm calling it an F for now because the technicals are really not confirming the spike to the upside. So price is the arbiter of the trend. As long as this price holds really steady and goes higher, that's going to be the technicals will follow soon enough. So those are the parameters I'm watching.
Basil, thanks so much for that. I appreciate that. I'm going to hang up, bid you a good weekend, and leave one last question. Maybe you get to it during the rest of your show, maybe not. And that is, of the sectors, the stock sectors that you're looking at, are any of the sectors rising into highs that are forming what I've heard you talk about over the years, and that is your hat trick topping patterns? So I just leave that question and I'll hang up.
Okay.
Thank you again.
Very good question. Thank you, John. Have a great weekend. I'll be right back. There's a break coming up. There are a bunch of things that we want to talk about as well. I had questions about NBR and blue. These are symbols that we will look at, but we haven't quite finished. We want to be looking at the yen. We want to be looking a little bit further at the dollar, and we want to be looking at the TLT bonds. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, let's do this quickly. So I want to go back to the, this is now the USD JPY. That's right, with currencies. So in the currencies, what we're looking at here, let me just get out of this right now. Okay. What we're looking at is very interesting because the USD JPY was telling us, just as it foretold the spike in September, just before the dollar really picked up and turned around, the yen started to rally, and then it started to fade, and the dollar showed a little bit of strength about 4 or 5 sessions ago. It couldn't quite hold it, but it was not bad. But the yen just plummeted. It went below the 200-period moving average EMA. It went below the 200-period SMA, the symbol. And right now, it hasn't yet tested the left side low, most recent low of late November, but it's at 111.256. So when I'm looking at this, I'm saying to myself, the relationship I've been looking at for a little while here is that there's a relationship, at least trend-wise, not percentage-wise, but just kind of trendish-wise, with the euro and gold. And there's been a relationship thus far with, for me at least, between the yen and the dollar. Okay. What's really important here is that the yen hasn't broken down. It is stuck. If you look at the monthly chart, you're just saying, ho-hum, stuck between a trading range for so long. This trading range at 111.26 is going to change if there's a decisive close below 108. And 3 points in this kind of market can happen really quickly. If there is a sudden spike back to the 112.20s, it's just even more important to think of it stuck in a range, right? So I just wanted to get that out of the way. I was asked if I just have a quick look at the British pound. Yep, the British pound, nice move up. Look at this, going to a leg F/C. I don't see any reason why I'm going to call it a C at this particular point, but it has the same cup formation. So in the weekly chart, this is a gray C because it's under the previous high, but the MACD is improving, and the stochastic is not great. It's 74%, but it is rallying. So this is the way I'm looking at it, that we've currency-wise, we've got a lot going on, and the monthly chart will improve tremendously if it can get to a leg D above 1.374 in the British pound at 1.3720 right now, up about 0.015. Nice candle. So I needed to do this. I wanted to give some kind of sense of what I'm looking at here. Now we can go to the TLT, and then a bunch of questions I'll get to. The question then, isn't the rising gold portending an equity pullback? You know, I think next week I want to talk about that. Although it's a technical Friday, I should do it. There are just so many questions that have come in. Let me do that. What I am looking at here, and that's the thing about the whole commodity aspect, the reason why we for subscribers to my opening call, my daily newsletter, our bias has really been towards bank stock, towards the steel area, towards the infrastructure area. I think that's important, towards concrete and stuff like that. That's what I'm looking at. Now, let's just go to the technical side of what we're looking at in the TLT. It's held the 200-period moving average weekly. This is the middle chart, it's the weekly chart. The monthly chart has that pattern that we look at so often, that cup formation goes back to an arch formation, gets to a cup, and now there's another arch. And all of a sudden, you're looking at some really important levels. And if the TLT takes out 122.50 as key support, it's gone. And now we'll be looking at the TNX. Let me just do this real quickly. TNX, which is the 10-year yield, hasn't broken above yet the high of 2 days ago. It's real close. But look at this. Left side, right side price time match, doing it in a quicker time. This is very good action in the weekly and the monthly charts of the 10-year Treasury note interest rate. And that's what we're looking at 25.63 up 32. And that hasn't yet affected the home builders. And it's interesting. It's usually late to the party, but we'll watch this very closely because just on a purely technical basis, the HGX Philadelphia Housing Sector Index is getting just a little, can I call it toppy? Yep, I'm going to say a little toppy, making the upside a little bit limited, but it also still has very good support. It's a 360, 355 is very good support. Now I can do a couple of things. I can go to crude oil because we want to wrap up with the crude oil. This is a peak D as far as I'm concerned, with no new high today in the daily, but the technicals are still very strong. Still don't see it as a short. I am looking at it and saying, hey, it looks to me like next week maybe there could be some kind of a consolidation. Couple of things I want to do. Airline index I was asked about. Let's go there right now. Airline XAL, this is the ARC Airline index. This is in an F/B to the upside. I'm sorry, F/C. So it says, yep, a little bit more to go, and then maybe it takes a bit of a breather. But look at that, beautiful. There's this H pattern that went to the cup formation I was talking to John about, and this is a breakout to the upside, and it's gone to a new high, leg E in the weekly chart, leg E in the monthly chart. Excellent action, especially the last 2 days. What can I say? Beautiful. The airlines Delta came in with really good earnings, up $1.27 after yesterday's big move up. G/C, I'm calling it at least for now. Yeah, very good action. Next question was JP Morgan. Leg E. Daily leg E, I'm not going to give it any alternate count right now. I'm calling it for now leg F as well in the weekly and monthly. It's only in a leg C. JP Morgan, banking financials, trading at 111.85 up 1.01. That's an E right there. Is it going to drop sharply? You know, this pattern says this whole area from the breakout on the above the high of the 4th of December, 108.40, to this big red candle here of the 14th, 104.64. To me, over the next 3 weeks, this is going to be key support. Upside, I think there's enough room to go a little higher from here. But the area that I'm really looking at, let me just draw it for you and we'll have it there permanently. This is the area that I'm drawing in as the key support area on any, not just day weakness, I'm talking about any concerted downside effort on JP Morgan. It's in the sweet spot. So John was asking me a great question. What would I be looking at as sectors that have run their course, that could be having a kind of what I call a hat trick top, meaning they've made not just a short term, but a pretty intermediate term top. I'll make a list over the next 5-6 sessions. I'll try to start them next week. I have ideas. There's certain sectors that I think are getting very overbought by any stretch of the imagination. Question I had was Triple M. Let me go through my Dow quartet. GE back in the running. It's down 15 cents. It's had a really nice pickup from the 1725 low. This is very nice. Next thing we're looking at is IBM. IBM, you remember, came out with a gap up that was back right in the beginning of January, and boom, it's trading up now at I'm calling it an A, B, C. This is really an E/C. It's getting a little bit toppy at 164.10 shorter term, and the weekly chart says it's broken to new recovery highs. That's very important. That makes 159, the 200-period moving average, really important support. So that's what I'm looking at. IBM's acting well. GE so far acting pretty nicely after being smacked to the downside. Triple M all-time high right now. Not sure what I can do about the wave count. It's an all-time high, and UTX is at an all-time high. So 2 out of the 4 are at all-time highs in my Dow quartet, and 2 are doing quite nicely. I'll be back. Dow's up 150, 160. S&P's up 13. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. So IYT, the transportation, iShares, huge leg E to the upside in the daily. Huge weekly leg E and a huge monthly leg E. So is it getting overbought? Well, let's walk in the 9-period moving averages at the upper end. That doesn't mean to say it's a short right now, but it does say that at 204, 199 to 197 will be very important support. And this verticality in the weekly chart has just begun. So this is just something to keep in mind, that the IYT technicals are confirming the rally at this particular point. But if there is a pullback, it'll be more like a sideways pullback just at this stage that we're looking at. I had a question about blue, B-L-U-E, and I looked at this a while back. Haven't had a chance to update it. So this is a leg E in the monthly. Bluebird. I said Cluebird, but it should be Bluebird. Inc. Bio. So obviously bio, in the bio area. So this is an E. Let's call this an E and an F. Here we go. So the question was, if one had this as a longer term position with a very ugly turnaround, the candles of the weekly chart, and that's a gap down, that was actually a peak, another peak E right there. Pull back and a gap down. What should one do? You know, the way that it's handled since then says to me, if you exclude this ugly candle, it's really trading quite well. So I'm going to say at 174.20, what I'm going to suggest to the person involved is, you know what? If you're very nervous and it's part of your company, you're in the company, or you have stock, whatever it is, you could take a little bit off here at 174. And this is what I'm going to recommend. Why don't you put a stop underneath the bar of 3 days ago at 165, 50. So make it to 165. And then they put a stop in on some of your position. On a shorter term, if you're able to watch it, just on a trading thing, it's at 174.27. If it pops up to 177, just use a 2 or 3 point trading stop. That's on a position. Keep the core. Let's look at it again later next week. I don't see anything right now that says get out, get out, get out, but I do see something that says might be limited. So that's what we've done for blue. Hey folks, check out my opening call. I hope you would just try it out and see what you think. It's called the opening call.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.